Hey, good morning, everyone. Hope you're all well. So, welcome to this week, another week here at Financial Hub, another week at trading the markets and doing what we do best. So, today I won't take much time. Ken usually does today's analysis, but I've stepped in for today. And I'll take you through a few things that I'm looking at. What happened in the markets last week as we came to an end of the week, because we saw markets really selling off. So, there was a bit of data that helped that move to the downside. And that's in fact the dollar rising to the upside. So it really knocked off a lot of pairs that we're normally watching, a lot of stocks, a lot of indexes. Actually, on Friday, almost everything was in the red. Cryptocurrencies, indices, stocks, and also many other pairs were in the negative zone, in the red zone. So I'll cover that. However, on Saturday, next week's podcast down that is going to come this week, we really dived deep to talk about the current market situation, and you're going to see what we talked about on it. And we really talked about what is happening in the markets right now, why things are selling off, the sentiment that many people have, the technical aspect, the fundamental aspect. So we covered all that in one video, so you'll see it this coming week. Apart from that, let me dive into the charts, show you what I'm looking at. A good number of people have joined, so thank you for coming in. Allow me to share my screen. I'll start with the reason why markets actually sold off on Friday. So as you can see, you have to pay attention to a lot of fundamental different stuff. The narrative keeps changing year after year. So when COVID came, what were we paying attention to? A lot of interest rates. So when the interest rates were being released on a month-to-month basis, when they were really lowering it, we were paying a lot of attention to the interest rates, which were affecting the market in a drastic way. Okay, and that time the dollar was really selling off. After that, we came to look at the unemployment. So it became a time we're looking at NFP every Friday, the first Friday of the month, when you have to pay attention to NFP and look at how market is reacting to the NFP numbers. Remember that time, market really had, or rather America really had a very high unemployment rate during that time. So the news kept being affected, the markets, kept being affected by the number of people who are being laid off and the number of people who are being employed as well. Okay. Then later on, the narrative started changing. People started paying less attention to the fundamental, the unemployment rate, okay? Started moving into the inflation numbers. And that's where we are right now. So you can see this time, inflation ever since October 2021 has really been rising. So this is trading economics. You can go to trading economics just to look at data on anything that you want to pay attention to. Okay, so this is the United States inflation. So you can see right now we are at 8.6. If you look at a 10-year trajectory, if you just press 10-year, you can see the last time we had this was not even the 10 years. If you look at a 25-year period, you can see inflation is going higher than we were in the 2000, what is it called? Both in the dot-com crisis as well as the financial crisis of 2008. If you take a look at a max, you're sort of now starting to push up levels that were back in the 1980s, okay? So you can see market is really pushing, now we're at 8.6, market is really pushing back to 10, and we can even see it moving higher. So why is this really being affected? Because
opening an account with Paperstone is easy. For those in Kenya, you only need your KRA PIN and ID card. Simple and easy. To register, click the link on the description below.
Whenever you see inflation, remember inflation acts as it's an effect that's caused by the Fed trying to control the interest rates, okay? So when the Fed are trying to lower interest rates, an effect of that or a consequence of that is high inflation numbers. When they tighten the interest rates, you see the opposite happening. So why was this a very important data and why did it affect markets to knock off? So on Friday, when the interest rates were coming, when the inflation numbers were coming, go back to our 1-year trajectory, you're seeing we are at 8.5, which was a very high number. Market fell to 8.3. So if you know, during March, May, was it March or May? Yeah, it was March and April, or April and March and May, when the Fed started increasing the interest rates. So we saw them starting to put a 25 basis point increase, okay? The first time they changed it. Then later on, they came and increased it by a 0.5 basis point or a 50 basis points, okay? So we saw that number, or when that happened, they were trying to control inflation. And for the first month, that actually helped because we saw inflation going from 8.5 back down to 8.3. But as they continue doing that, the opposite actually happens. So they're trying to control something that is not sort of being controlled. So with the expected number, you can see the consensus of the number that was being expected was 8.3, the consensus 8.3, and many people are foretelling 8.3, sort of it to remain flat. But what happened? 8.6 was the increase. So that's what you're seeing over here. Annual inflation rate in the US unexpectedly increased to 8.6 in May of 2022, the highest since December of 1981. Okay, so you're seeing these are very, very high numbers. So it's important to pay attention to. So market narrative right now is really, really much on the inflation numbers. That's what people are paying attention to. Okay, so you need to pay attention to that. Apart from that, so as I said, we did a podcast on this, so you'll be seeing it very soon. Apart from that, this week we have federal funds rate. Okay, so interest rates from the US. You have to pay attention to that. This is really, really important to watch out for this week. As you can see, many people, the previous number we had was 1%. That's where they pushed it to. Okay, but now a lot of people are forecasting that a 50 basis points is what we're going to see, with the market moving up to 1.5. So these are very important drastic measures that the Fed are trying to take in order to control the inflation numbers, which are steadily, not even steadily, highly rising, okay, in an uncontrollable way. So that's what we'll be paying attention to this week, not only in the United States, but around the world. You can see also Great British Pound. This is the Bank of England. The previous was at 1%, okay, but people are seeing a 25 basis point increase. So this week, pay a lot of attention to the interest rates. They are heavily going to affect the markets, okay. So those are the risks that we're taking in measure this week. As we usually say, we're not really fundamental analysts, but you cannot ignore fundamentals. At the end of the day, they're the drivers of the market. Interest rates is the backbone of the whole of the financial sector, and that's why we saw cryptocurrencies crashing. We saw what is it called? We saw cryptocurrencies crashing. We saw stocks crashing. We saw indices crashing, as well as other pairs. Okay. So if I go to my chart analysis, this is also dollar. Let me just start with an overview, just looking at different markets that we're normally seeing. So if you go look at this, you're seeing over here on my right side, everything is in the red. Okay. Cryptos are falling. Bitcoin is now to 24,900, basically lower than 25,000. Ethereum is down 10% today. XRP is down 7%. Solana is down 10% today, and many other currencies. Dot. This is what's it called? Dot. Polkadot is down 8%. Okay. Sandstorm. This is Sandstorm or Sandbox. Down 10%. So you can see everything's on the red. Look at this. Bitcoin moving down heavily. Look at Ethereum selling off. Everything selling off. Look at XRP. Look at Filecoin. Look at Solana. Look at BNB. Okay, this is Binance Coin. Everything is falling, and that's just on stocks. This was on Friday when we had, now if I go to my stocks that I'm watching, Google, Tesla, Apple, Netflix, Nike, Facebook, everything was down on Friday. Amazon, okay? So it was a red day. If you come and look at the indices, not only in America, but around the world, US 30 was down on that day. Australian dollar was down. UK was down. DAX down. MOEX down, okay? So everything is moving down. You can see the VIX just today alone is up 14%. So there's a lot of volatility in the market, a lot of volatility risks that you need to pay attention to, okay? Very, very important to watch this, okay? And apart from that, that's basically what we are seeing. If you look at the Kenyan shilling, for those people who are in Kenya, the Kenyan shilling has really been crashing against the dollar. Okay, so this is the dollar rising against the Kenyan shilling. Okay, something we were saying that I normally teach with my students. If you look at a 1 week chart on the Kenyan shilling, I know I've gone a bit off topic, but it's important to look at the markets worldwide. Okay, ever since the presidency of Uhuru entered, this was back in 2012, 2013, you can see we had a low of 82. The dollar was at 82, okay? During that whole time frame, we've seen almost markets, our currency being devalued by about 50%. Now we are heading to 120, okay? So that's a very, very important information you're paying attention to. The dollar has really been rising against many things, including the Kenya shilling, okay? So with that said, that was just a recap for you to see where the dollar really is, because the dollar is sort of, at the moment, the dollar is king against many other currencies. If I go back to my pairs, Let's start with the dollar alone. Looking at the weekly chart, you're seeing how market reacted to that news. And now market is really pushing to an all-time high of, if I zoom this out, we're sort of going back to the highs of, we're going back to the highs of 2002. Okay, the dollar hasn't been this high since 2002. Okay, so we're sort of pushing to that level. Market is about to break the $105 mark, and possibly that's what we're going to see starting this week. You see this crazy move breaking above this, okay, as the dollar keeps, people are rushing to the dollar as a rule of thumb, as a safe haven, and that's exactly what we're seeing. On the other side, we're also talking about this on our podcast video, that the dollar is acting as a strong carry trade against other currencies, meaning that the dollar is gaining more interest as compared to other currencies, and that's why you're seeing things like the yen really falling, selling off. Look at JPY index, Japanese index, you've been seeing it's really been falling against many other currencies, especially against the dollar. So that's why you're seeing the yen really moving down. Remember, the yen has been having a negative interest rates for the longest time. So if you take the dollar compared to the yen, the dollar is a much safer currency to hold as compared to this. Okay. So if I go back to the dollar, what are we looking at? I won't be surprised to see the dollar continuing to rise. You're already seeing the market is up 0.5 percent today morning, and you can easily see this rally continue, which started on Friday. Okay. If you look at the forward chart, right now I don't even have any technical really to watch at the moment. The trend is your friend right now until the trend changes. Okay, it's breaking barriers to the upside, and I wouldn't be surprised if you break this previous high that was formed on the 16th and 15th, around the 13th, 12th, 13th of May. Okay, so I wouldn't be surprised to see market break that high, going to highs that were created in 2002. On that other case, looking at the Euro USD, you're seeing the Euro USD is continuing with the downtrend. Nothing has been broken. No, the market hasn't broken any bullish bias, so we have not seen any bullish move on this one. We didn't break any resistance level. We didn't break any trend line to the upside. So this one, just continue expecting it to move down. I have this trend line, and I have another. This is the primary trend line. I have a secondary one, which is here and here. Okay, so you can see this was a third trend line bounce, a very good trade to the downside. So for those people who trade technicals and look at trend line bounces, this was also a very good trend line bounce to the downside. Same case with GU. Okay, GU is also moving to the downside quite heavily. I have my trend line here, so I'm just testing something. So you're seeing this massive trend line bounces to the downside, and market is getting that third trend line bounce. This is the first touch, second touch, third touch, boom, market being sold off to the downside. So expect this market to continue selling off. I don't see anything that is holding the market not to sell off to the downside. If I go down and look at the US 30, which is an index, you're seeing today already, pre-market, it's already down 2%. That's a heavy sell. These are things you see when the markets are really being sold off by many investors. Okay, so many people are panic selling up, other people are just taking the profits out, other people just want to sit on the dollar as cash. So when you're seeing these things falling, of course, if people are selling stocks and they're selling indices and they're selling cryptocurrencies, what's the alternative they're going for? Of course, they're going for the dollar, and that's why you see the dollar really rising to the upside. So you're seeing this market is already down 2%. If I go look at the US 100, which is basically the Nasdaq, I'm sure it might be even down even more. Here we're looking, it's down like that. It's already down 2.6% for today, right? Yeah, it's down 2.6% for today. If you look at US 500, which is S&P 500, it's already down 2.1%. These are crazy drops for a Monday morning. And of course, don't be surprised to see the market continuing to sell off. Okay, we are at crucial times, and we need to pay a lot of attention to the nitty-gritty. So at this time, it's best for you to play defensive, unless you're selling things. Okay, it's also best for you to play defensive, as the VIX is really rising, as I've shown you. VIX is really rising, so volatility will be high. Don't be surprised if you see many spikes moving again to the upside. Okay, so volatility when it's high, anything can happen. So be prepared for anything, as a rule of thumb. So most of the things that I'm looking at, I don't even have any technical to tell you that I'm looking at this pattern, or really markets are really selling off. If I go to the gold market, we saw a lot of movement on Friday when inflation numbers came out. If you look at the 4-hour chart, You're seeing the 4-hour chart, market strongly moved down. Okay, if you remember on Friday, I'm sure this is the normal and not in a bad way, but I can easily predict that many people or some people might have blown accounts on Friday evening. Okay, when markets news came out, market strongly dropped down to 1825, which was a good support level. Market shot up again to 1875, which was a good resistance level. Now you're seeing market going back down to 1850. So I'm pretty sure many people did a lot of shenanigans on Friday on this one. I hope people who are here are not part of those people. Okay, remember, risk management is key. You never know where the market is going. The best you can do is just prepare for it. Okay, so that's what happened on this one. No technical. There's this beautiful flag pattern that market formed a good support here, and market moved all the way to the 1875, which will of course act as a take profit level. Okay, so today I'm seeing a lot of sell-off. I'll go back to the 1 day. I want to see how market will go back down to respect the 1850. Market hasn't really left these levels for the longest time. We've just been dangling above at the 1825 and 1875 resistance and support levels, and 1850 has sort of been acting as the midpoint level where market has really been dangling around. Okay, so I'll be paying attention to this one. Nothing as well, no significant analysis on it. If I go down to Aussie dollar, finally we went back to the test the level I was talking about, the 0.700. So if you've been following the analysis, we're talking a lot about market testing this level. Exactly what we got last week. We got a good sell-off after getting resistance at the 0.7250 level. We got some good resistance, and look at that sell-off, how market has really gone back down to this level. So this is the level to watch today. You can see before it was a support. Okay, today I will also be paying a lot of attention to it, and like I said, I won't be surprised to see this market selling off and breaking below this level. Okay, so that's what I'm watching on this one. If I go to the 4-hour chart, like I said, no pattern really that I'm watching right now. Markets have really been selling off. Unless you get corrections of this pattern, they continue looking for a move to the downside. That's what I'm paying attention to. But at the moment, markets are at an impulsive phase. Okay, and same thing goes to USD CAD, my last but not least pair. Markets broke barriers. Looking at the daily chart, we're breaking above key levels. Okay, the trend is your friend. I said, people, until the trend breaks. You've seen here, market has been forming high, low, high, low. I wouldn't be surprised to see the 1.2950 level being taken out, especially after we got this first touch, second touch, and third trend line bounce. Okay, you can see that impulsive move is basically showing you the underlying direction of the trend to the upside. You can see those moves. Look at compare how market moved to the downside and like how we are moving now, compared to now how we are moving to the upside. At about 3 to 4 day consecutive bullish momentum, with each day market moving more than I think 1% per day. Okay, so you have to pay a lot of attention to that. So that's basically what I'm watching. Like I said, today I don't have anything much. Just wanted to catch you up on those things that I'm watching. Like I said, pay a lot of attention to the VIX. Volatility is very high, and when volatility is high, it can make you have to think, be very cautious and defensive. But if you're in the right direction of the trend, you can also be hold on tight and be aggressive on that one. But remember, at the end of the day, do not risk too much, even if you're on the right side of the market. Okay, so I think that's pretty much it. That's basically what I'm watching. I don't have anything much apart from that. Like I said, I just wanted to update you on what I'm watching. No trades running now at the moment. I'm just seated neutral, looking at how market is performing, what's going to happen next. Like I said, pay attention to the interest rates that are going to come out later this week from the Feds and from the Bank of England. So those two. Last week we already had the ECB, which affected markets, the CPI, so they affected markets on those 2 days, and now we're paying attention to the interest rates for this week. So that's pretty much it. I think I'll end it there. So then I'll see you guys on Wednesday. I think Wednesday is the day for the interest rates, so we'll catch up on that, and then Friday as we end the week off. So that's it basically from me. I have a couple of things to get into. Don't see any questions. I just see astronomy saying morning to you. Hope that was a good analysis. And I'll see you guys soon. Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.